Hello, welcome. Thank you for joining me. My name is Michael. I'm a market analyst for Luxolo and your host for this webinar 15 Reasons Why Now is the Best Time to Invest in Digital Assets. Please direct any questions or comments you might have to my email address as you see it on the screen, sales@luxolo.io. Before we get started, I just need to read our legal disclaimer. This video contains observations and opinions by me, Michael Seymour. All views expressed are solely my own and do not necessarily reflect the views of Luxolo. Listeners should not construe any of this content as a specific inducement to make a particular investment or follow a particular strategy. This content is for entertainment purposes only. Okay, let's dive in. Number one, Bitcoin has legitimized the entire cryptocurrency ecosystem and blockchain technology, with major financial institutions, including BlackRock and Fidelity, issuing Bitcoin ETFs, and shortly thereafter, Ethereum ETFs, and even some rumors of other blockchain protocols on the horizon. We have presidential candidates that are campaigning on cryptocurrency platforms and even talking at Bitcoin events. Number two, regulations are here in some places. The international community has already formulated effective regulations that protect investors while still fostering economic development and innovation. Dubai, Singapore, and the Bahamas are courting crypto innovators with well-defined policies. The European Union has recently enacted the MiCA framework into law, that is markets in crypto assets regulation. This broad-based legislation clarifies the approved development pathways and procedures for companies to follow in accordance with the law. This regulatory certainty enables and empowers innovation and technology within their jurisdiction. Now, the US is lagging in this arena, but catching up, and soon game theory will take over and all nations will compete to develop the best services, products, and technology. Number three, this period of it's just a fad, it's another tulip bubble, or it's just for criminals is over. Crypto has proven itself resilient against the naysayers, and it is clear now this technology is here to stay. But here are some headlines from prominent sources claiming that Bitcoin will go to zero. Forbes in 2016, Bitcoin is a scam and will go to zero. Bloomberg 2019, why Bitcoin will eventually drop to zero. Or we've got The Economist 2022, Bitcoin, a bubble that will end in zero. And most recently, why Bitcoin is dead, a dead end investment 2023 from Yahoo Finance. And that's the most recent headline that I can find making these claims. And I think these claims are officially over. Number four, digital technology defines the modern industrialized society, at least in terms of communication, manufacturing, creativity, education, finance, and many more. Privacy and security need to be reconciled with interoperability. In other words, while we need to keep some data safe, that same data may also need to be shared. Cryptography is part of the tool set that allows data to be both protected and shared. Cryptographic currencies are products built from and within these technological code-based systems. They are endemic or native to their environment. And as long as digital technology continues to develop and integrate into our lives, and I think that's pretty clear it will, cryptocurrencies that will enable seamless and immediate transactions. Number five, the rise of the machines. I like this headline. I stole it. And I hope I don't get into trouble for it. But my message is a bit more benign. Artificial intelligence is proliferating quickly. Soon enough, every smartphone will come with a customizable, adaptive AI agent. These agents will communicate with each other, may even have to transfer money. They'll have access to token gated crypto wallets, and these will be used for payments, but also for just simply sharing information. Blockchains are really built for machines to communicate with each other. At least that's what they are best at. Which brings us to the Internet of Things, which is here. You might have encountered this in small degrees with a Fitbit or a smartwatch. There's smart rings. We have the Ring doorbells and camera systems that you can access from your home. This is all part of the Internet of Things. It's part and parcel with the rise of AI, but packaged under a different set of utilities. Sensors gather information, it gets encrypted into a blockchain. It may be identified with a user ID or a device ID or both. And this could include groceries in your refrigerator, but will most likely start to take traction with more commercial activity, agricultural production, soil quality, solar radiation, water availability and purity. These are the metrics that matter to capital markets. Energy, or more specifically, electricity, can be easily monitored and metered using AI-enabled blockchains. This gets increasingly relevant as we start using electric vehicles more and more. All right, number 7, credentials are the new degrees. This is a bit forward thinking, but there is a massive push to redesign the educational system and workforce training certification programs. These certifications will exist as tokens on a blockchain or NFTs in your wallet. But one of the main advantages of blockchain is that they are perfectly publicly verifiable, and yet the data is encrypted, so it's still secret. This is called zero knowledge proof, and you'll hear more about this technology in the coming years. The advantage is that the owner can choose to present credentials, and the recipient only gets acknowledgement that the owner's claim is true, not necessarily seeing the actual credential. The common analogy for this is walking into a bar. You get stopped at the door by the bouncer who checks your identification and gives you a wristband. And then when you're in the bar, you go to the bartender, ask for a drink, you show them the wristband, which has no personally identifying information, but nonetheless assures the bartender that you are authorized to make that claim. So this technology of proof and privacy is going to be useful in healthcare, medical records, financial records, employment records, university degrees, and continuing education degrees. Obviously, government, citizenship status, travel permissions, all of this is becoming encoded onto a blockchain. Blockchain voting has already completed some successful pilot programs. It runs into some headwinds because the legacy system has been entrenched for hundreds of years and is slow to adapt, but that is coming. It is one of the most obvious use cases for this technology. Just imagine knowing that only one person can cast one vote, that person is authenticated to legitimately participate in that vote. You can monitor the results of the voting in real time, and as soon as the voting is finished or the polls close, you will know the winner with irrefutable certainty. This is actually quite easy with blockchain technology. Number 9, the US government debt is quite frankly insane. It is incomprehensibly large, stacking cities of hundreds of dollar bills large. How does that get resolved? To whom is this debt owed? What's backing this debt? Is there collateral? Does any sane person actually believe this debt will be paid back? The dollar still is the global reserve currency and enjoys special privileges that facilitate the US debt to grow so unsustainably. That reserve status is not changing overnight, but it is starting to dwindle with the rise of the BRICS currency bloc. Much of the power comes from its control over oil markets. Through various agreements and treaties, oil producers agreed to settle oil contracts only in dollars. This was called the petrodollar system, and it was a massive economic power base until just recently, when Saudi Arabia refused to renew that long-standing agreement. So we have a choice of defaulting on the debt or paying the debt. A default is catastrophic, and I think that is very, very, very unlikely, which means we are on track to pay back the debt. Really, it's such an astronomical number. The only feasible way to do that is to devalue the dollar. So inflation through monetary debasement, and inevitably or ultimately that ends in hyperinflation, which means you might want to consider getting some Bitcoin. Bitcoin is built for this scenario, built to protect investors, to protect wealth from monetary debasement. Other cryptocurrencies have some other utility, but none beat Bitcoin for this purpose. So if you take a look at the image on the screen, this is a screenshot from the usdebtclock.org. I took it yesterday, September 4th. We see in the top left the US national debt over $35 trillion. Again, unfathomable amounts of money. But what we don't hear too often is in the bottom right hand corner, the US unfunded liabilities currently sitting there at around $218 trillion. So that includes Social Security obligations, Medicare obligations, and federal pension funds, and a few other buckets that are in there as well. So if you take that and you add it to the 35 trillion, we're looking at about 250 trillion dollars that the US federal government is obligated to pay. Just to get an idea of how much money that is, these are images taken from visualcapitalist.com in accordance with their terms. So you start on the left with one $100 bill, and then you get 100 of those, you get $10,000. 100 of those clips, you get $1 million. And 100 of those $1 million stacks, you get a pallet of $100 million. And we're starting to see some real volume and size here. You can see the scale reference for the lady on the couch. And then you get 10 of those stacks, you get $1 billion. And that, look at that, that is more money than any of us will ever see in several lifetimes. And we're just getting started, because on the left here, you have $1 trillion. So those are still those same pallets of $100 million. There's 10,000 of them there. It's taking up several football fields. That's the White House in comparison for the scale or size, enormity of this amount of cash. And again, that's just a drop in the bucket. The one on the right is $20 trillion. So this was the amount of outstanding US debt in 2017. Obviously, it's a lot higher now, but those are skyscrapers built out of these pallets of $100 million. In the middle there, you've got the Statue of Liberty for a scale reference. And still, this is only 20 trillion. So if we're looking at 250 trillion, you're seeing 10, 11, 12, maybe, it's growing every day, of these cities of stacks of pallets of $100 million. It's unfathomable. This is why I say the US debt is, quite frankly, insane, at least irrational. There's a lot of money floating around in markets. Investment funds hold enormous wealth and look to preserve and grow that wealth. They do this by investing in areas where they can increase economic output. So currently that's considered to be the global south, as industrial capacity is pretty well developed in the northern hemisphere. These efforts are facilitated by hundreds, if not thousands, of NGOs and private companies, and even governments participating in these public-private partnerships to empower rural communities with agriculture and healthcare and education, and in so doing, improve the economic capacity and get a return on their investment. If you would like to look a little bit further into this, visit Celo.org, CEL.org. That is one of the principal blockchain platforms or protocols involved in these efforts. One of the founding principles of Bitcoin, and therefore blockchain technology, is disintermediation, or cutting out the middleman. So when there's fewer participants in a transaction, it takes less time and costs less money. The drive to maximize profits in any and every commercial enterprise is always seeking to improve efficiency. An easy example of this is cross-border payments. Currently, banks use a legacy system that often takes days to finalize international payments. Blockchains can perform this same function in seconds. We are still early in the adoption curve. To be clear, it is not the beginning, but there is still an immense amount of capital that will funnel into blockchain markets over the next decade. As more industries adopt blockchains, the protocols become more valuable. And this means that the tokens that are required to participate in these protocols may also increase in value. This is not always the case, but many protocols are designed to function this way. It's part of the decentralization ethos. In order to recruit a vast network of operators, miners, and validators, they must be rewarded. Token value is most of that reward incentive. You can see in the images, graciously designed by Anil Patel from his excellent book, The Bitcoin Handbook, used with permission, Bitcoin adoption has a long way to go. It is clearly the most favored store of value in the cryptocurrency asset class, but money has other functions. We may see waves of adoption as Bitcoin becomes a medium of exchange, and then again as it becomes a unit of account. FOMO is real. Fear of missing out is an easily manipulated aspect of human nature. There may come a time when most people you know are talking about their crypto portfolios, and many others are clamoring to jump into the market. Now, this would actually be a good time to de risk your portfolio. Savvy investors see this activity as a chance to take profits on their earlier investments. This is not financial advice, but beware of the FOMO frenzy. Nonetheless, when markets behave like this, massive amounts of investment capital floods in, hoping to ride that wave. Number 14. So, how many teenagers do you know that like to play video games? What happens when game makers adopt crypto rewards or transferable NFT avatars? Legions of youth will be competing for gaming rewards, which will actually be real money. This may lead to the fabled metaverse, like it or not, and I don't, but that won't stop it from happening. Technology transforms society, and we are on the precipice of a radical shift, a future that is actually impossible to predict. Some call this the singularity, and it is coming. We may already be in the beginning phases of it. The old models won't apply. So it's conceivable that hundreds of millions of people will engage in virtual worlds in a meaningful way for many hours each day and enjoy it. Look, all of these trends indicate that society is changing and fast. Younger generations will come to use crypto like we have come to use the internet. It will be inextricably linked to our lives and everywhere. This just means that more capital is coming into these markets. This is a chart from Bitcoin tracing from 2017 through today. It's in log scale, so the ups and downs are a bit more muted, but you can see the general trend upwards and to the right. Now, it's unlikely that Bitcoin can grow at this rate forever, but there is still a lot of room available. Bitcoin has a current market cap of around $1.15 trillion, which is a lot. But if you consider real estate, stocks and bonds, or the derivative contracts tied to these things, the value of all of these other investment vehicles is in the quadrillions of dollars. Try to visualize that. And a decent portion of that wealth is coming to a blockchain near you. If you own a little before the tide comes rushing in, you may benefit from the price appreciation. As they say, a rising tide floats all boats. The trick is that you need to be sailing now. And that's a wrap. Thank you for tuning in. I hope you enjoyed my presentation. Please feel free to email me with any questions or comments. Again, my name is Michael, and you can reach me at sales@luxolo.io. Please visit our website to learn more, luxolo.io, and look for us on Twitter, YouTube, Facebook, and Instagram, and download our app today. Thank you.